In today's episode, we're going to cover, do you actually need a 20% deposit to buy your first home? The options available for you as a first home buyer, how much you need to save, and tips for saving your deposit. Hello, and welcome to First Home Unlocked, the podcast for unlocking clarity and confidence for first home buyers. I'm Jack Elliott, National First Home Buyer Specialist at Alcove.
And I'm Chris Bates, ex-financial planner and mortgage broker.
Together, we are on a mission to empower you with the keys to unlock your first home. Let's jump in. Hello, and welcome back to First Home Unlocked. Chris, how are you today?
Doing well, Jack. Looking forward to this. How's things on your end?
Yeah, good, thank you. Good. Had a nice weekend away with Amy celebrating our anniversary. So we went camping and had a nice relaxing time until the last night. There was a big gust of wind that come through and snapped the whole tent. So we kind of had a decision to make. Do we sleep in the car or do we drive the hour home? So in the dark, had the head torches on and packed up the whole car and headed home and laughed the whole way home about it. So it was a bit of a chaotic end to the trip, but it was a relaxing one at that. So had a really nice weekend, which was good. And I'm really excited to jump into this episode with you today. So we're up to step 4 in the buying process, and today we're unlocking your deposit. So in today's episode, we're going to cover, do you actually need a 20% deposit to buy your first home? The options available for you as a first home buyer, how much you need to save, and tips for saving your deposit. So Chris, as you mentioned, you're really excited to talk about this. So do you need a 20% deposit to buy your first home?
Obviously you don't. I think that's the truth here, and that's what we'll talk a lot about today. But I do feel that there is a cohort of first home buyers, and the media perpetuate this, which we'll talk about today, that still believe that they need a 20% deposit. And the problem with that is that when you're taking many, many years, and a lot of media articles sort of say it's going to take you 20 years to save a 20% deposit, when no first home buyer can realistically save a 20% deposit. And so I think that's going to be a good thing about today's episode, is really busting those myths and really just giving you an overview of all the different ways first home buyers can enter the market if they haven't got a 20% deposit.
And I think that's key. What you've brought up there, Chris, is today's episode is going to be focused on, debunking that myth of that 20% deposit. What options do you have? And I'll mention as we go through where we're going to go into more detail in future episodes. As you said, a good place to start is if you have that 20% deposit, well, that's great to especially avoid certain costs, but it's not actually a requirement to buy your home. So where does this idea come from? Now, there's a few points I wanted to mention. There's the lender's mortgage insurance. So this is also referred to as LMI. And if you don't have a 20% deposit, most lenders will charge you lender's mortgage insurance. So lender's mortgage insurance is a one-off insurance cost that protects the bank, not you, if you default on the loan. So it's a cost that's added to your loan and it can be expensive, which is why people aim for that 20% to avoid it. So naturally, people hear 20% equals no extra fees and assume that 20% is a must. Now, the second point is that parental advice that a lot of us are given. So from our parents, they bought homes in a very different market and there were different options, and saving a 20% deposit might have been more easily achievable. So they passed down that advice with good intentions, but the market, lending options and affordability have all changed. So Chris, do you think there's any other reasons why 20% deposit is still what some people assume they need to buy their first property?
Look, I think you're right. Absolutely here, Jack. I mean, people have got a lot of myths around lender's mortgage insurance. We'll do a whole episode on that and really unpack it in detail. I think there's a lot of misunderstanding of how expensive it is and how to sort of best use it. A lot of people, really just avoid it at all costs, right? I'm going to save 20% because I don't want to pay it, but there's an opportunity cost of, waiting in the market often, and that might be bigger than the cost of LMI. The second thing around parental advice, absolutely. Back in the day, they may have found it was really hard to get a property without a 20% deposit. But, I think a lot of parents have come to terms with that. They realize that either the kids can't save it, they'll have to sort of help them. And a lot of parents do often want to help kids get that 20% deposit. And they really try to get them to avoid paying lender's mortgage insurance, which isn't really a good idea for them as well, because they'll probably be able to have that money in an offset account, etc. So the media jump on this as well. They do lots of articles of how many years it takes to save a deposit. And so it's just so ingrained that that's what you need. But today's really just exploring all the ways you can buy without a 20% deposit, because most first home buyers won't have that amount of cash.
And that's a good point that leads us into the next section of this episode. So you talked about the different options that first home buyers have without a 20% deposit. So let's talk through them now. Let's look at your options if you had between a 5 and 10% deposit. So your first option is you have the first home guarantee scheme. Now we're going to do a full episode going into depth on what the first home guarantee scheme is and how it all works. But a rough overview is the first home guarantee scheme is the federal government scheme. So it helps eligible first home buyers purchase with a 5% deposit and they pay no lender's mortgage insurance. So you must meet the eligibility criteria and purchase below the cap in your state or postcode, which we'll talk about in more detail. The second option you have is the family guarantor option. Now, you may be able to buy with a 5 to 10% deposit if you have a family member who is willing to be a guarantor on the property. Now, a family guarantor is someone, often a parent, who uses equity in their own property to secure part of your loan. So this reduces the risk in the eyes of the bank, and we will go into depth in a future episode on family guarantors and how it all works. Now, outside of these two options of the first home guarantee scheme and the guarantor option, you still can get a loan with a 5 to 10% deposit. However, we wouldn't recommend this in most cases because these loans will attract a much higher interest rate. There'll be higher lenders' mortgage insurance added to your loan. Only a handful of lenders offer this product, which means your options are limited. And these are more risky, and you would need to carefully review your ability to service and make your repayments in these cases. So talking with your broker is key at this stage. So they're your options with a 5 to 10% deposit. Now, if you had a 10 to 20% deposit, so if that 20% deposit feels out of reach for you, a solid goal is often to aim between 12 to 15%. Now, why is this? Well, this gives you access to more lenders as you're under that 90% loan to value ratio. Now, loan to value ratio is the percentage of the property's value that you are borrowing. For example, if you're buying a $600,000 property and borrowing $540,000 in a loan, your LVR or loan to value ratio is 90%. So interest rates are more competitive under this 90% loan to value ratio. You do still pay lenders mortgage insurance, but the more deposit you contribute, the less LMI you pay. So Chris, as you mentioned before, there's always that big conversation around whether people should push to avoid LMI or just get in sooner. So when does it make sense to pay it? And when might it be better to wait?
Look, it's a big question, right? And I think that the game's always changing. And the first home guarantee scheme, the government sort of launched, it was maybe 18 months ago. And then they've relaunched it again with the current election and have expanded the caps for all the cities. And there's no income caps, etc., which we'll do a full episode on. That is a pretty amazing scheme to be able to buy with a 5% deposit and pay with no LMI. But when that didn't exist, often we were trying to get clients to a 10 or a 12% deposit, because then that would really reduce the amount of lenders' mortgage insurance they would pay. They couldn't get to the full 20%, but getting to 10 or 12% deposit was a really good spot to aim for. And we'll talk about why when we go into the lenders' mortgage insurance episode. Often, though, some people really forget about is the guarantor option, though, which, as we'll do another episode on that again, that is sometimes the case where that makes a lot of sense, where family have, often when they've got maybe an investment property or they've got a lot of equity in their home, or it really doesn't affect them too much if you use a guarantor option. And a lot of first-time buyers just don't even ask their parents, potentially exploring that. And so we'll do an episode on unpacking the pros and cons and the risks of that as well. And so, yeah, if these guarantee schemes didn't exist with the government, then yeah, you'd probably try to get to a 10% deposit if you could to really reduce your lender's mortgage insurance. But that guarantee scheme really does open the doors for most first-home buyers with just a 5% deposit.
So that's right, Chris. It's all about exploring your options. There's a lot to cover here, as we've mentioned. The other branch of the home guarantee scheme that not many people know exists is the 2% deposit. This is called the family home guarantee scheme. So this is for single parents or eligible carers. So you require just a 2% deposit. You pay no lender's mortgage insurance. Again, you must meet the income and price caps, and spots are limited to 5,000 places per financial year. So this scheme is specifically aimed at helping more single parent households access the property market. And we'll go into that in detail in the first home guarantee scheme episode. So Chris, is there anything else you want to add here about the different options available for first home buyers?
Look, there's only the final one, which we probably haven't discussed here, which is there's always new sort of fintechs or new sort of lending options coming in for low deposit first home buyers as well. But they often have very limits in terms of the requirements, in terms of getting access to these loans. And so that's the only final one. But I guess the real point of this episode is really to say, look, there's usually lots of options if you haven't got a 20% deposit, and trying to figure out what's the right option for you is really the thing that we're trying to achieve when we're working with clients, is trying to say, okay, well, you've got a 10% deposit. This is what you're looking to purchase. This is what other cash you've got, reminding that you might have to pay stamp duty and things like that as well. And we go, well, you actually got an eligible profession, so you don't have to pay lender's mortgage insurance. Or maybe you should use the government guarantee scheme, or maybe you should pay LMI or go a guarantor loan. With a lot of first home buyers, we're trying to figure out what's the best way that's going to protect you and get you the borrowing capacity that you need and the purchase price that's actually going to get you a good asset. And so that's where we come to, our skill set really comes to play, is to educate you on all your different options and help you figure out what's the right path for you.
Exactly right, Chris. We are here to explore that with you and take the time to explore the different options. How does it all look? Put it all out in front of you so then you can make the best decision for your situation. So the next question that usually comes is, well, I've got options and what I can do, but how much do I need to save? And this is where it's key to speak to your broker early, ideally 12 months out from when you think you might be ready. And your broker can help you understand your borrowing capacity, explore the different deposit options available for you, and map out that savings plan that's realistic, and also explore schemes like the First Home Super Saver scheme. Now, we're going to cover this in a future episode, but this is where you voluntarily contribute extra money into your super that you can then draw out with a tax benefit when you're ready to purchase your first home. So we recently had a client who was planning on saving a 15% deposit in the next 12 months when they first come and spoke to us. But when they did speak to us, we found out they were eligible for that First Home Guarantee scheme, which meant they could buy now with their current savings of 5%. So again, by having that conversation, we're opening options up to clients to be able to think about, well, do I want to purchase now? Can I get that good quality asset using the First Home Guarantee scheme? There's all these questions and options to discuss with your broker. Now, like we mentioned on the last episode, it's always worth keeping a buffer. So don't use every single dollar you have on the deposit. We like to keep buffers for moving costs, furniture costs, unexpected expenses. So keeping a buffer for these things are so important. So let's break down an example. Let's say you've saved 8%. If you're eligible for the First Home Guarantee scheme, you could potentially use 5% deposit and keep that other 3% in your offset account as a buffer. And this still helps to reduce interest, but that savings stays accessible for you if you need to access it, rather than putting in the full 8%. So now that we've gone through your options, let's work backwards and build a plan. So starting with what's coming in, what's your post-tax income, then looking at what's going out, what's your current spending. And then the third point is what's realistic to save on a weekly or fortnightly basis while still living comfortably. A good habit to get into is simulating your future mortgage now. So if you and your broker think your mortgage might be $2,000 per fortnight, let's say, start saving or putting that amount aside now. That way you're building the habit, you're testing the affordability of that mortgage, and you're increasing your confidence as you're doing that. So personally, Amy and I use a spending plan system that uses bucket budgeting. So all our income is allocated and then gets automatically distributed to different accounts, such as our bills, food and fuel, fun, and savings. So we've set up auto transfers so everything moves out where it needs to be, which makes it really easy for us to manage. Now, Chris, I know you've seen a lot of creative ways first home buyers have made their deposit happen over the years. What's some examples that come to mind, or what are some tips for saving or budgeting?
Look, I think you've started off with some really good ones there, Jack, talking about a bucketing system with budgeting and setting aside and almost like pre-living like you've already got the mortgage. I think that's really, really smart. I mean, The Barefoot Investors is a great book that people should probably have a read if they're struggling to save or struggling to get on top of budgeting. Once you've got a goal on what you're trying to need to save for a deposit, there's something, your behavioral biases will try to make that happen, right? So it's all about, once you've set the goal, figuring out where you are today, and then putting a realistic saving plan in place, not only just trying to save as much as you can, but also often trying to improve your income as well so you can save more. So let's do a full episode on how to save for a deposit and utilize things like the First Home Super Saver scheme. But yeah, I think the most important thing is starting to live like you got a mortgage. That's a really good way to think about it, Jack.
I see so many of my first home buyer clients start that habit early, and it just makes it easier when you transition into actually buying and then living in your first home. It doesn't feel like such a shock that there's a big mortgage and something you haven't accounted for. You've already been kind of spending that way and living that way already. As you've mentioned, Chris, there's a lot more detail that we're going to go into in the future. And the key takeaways from this episode are that there's a lot of options out there. There's more options than just the 20% deposit that we've covered. And we'll go into more detail in the future. Now, talk to your broker early to see what's available for you, so you know these options and you can start to see, how does it feel in my situation? Which option would I be likely to go for early on, so you can plan around that and set up a savings plan that works for you. Now, if you are feeling overwhelmed and unsure of how much you need to save, let's break it down together. You can book in a free get to know you chat, and we'll talk through all your options, help you figure out what's realistic, and give you a clear next step for your situation. And I just wanted to make a quick reminder that we're in episode 4 now, and we want you to be a part of this journey with us. So do you have a question about buying your first home? Do you want to learn from others going through the same process? You can join our Facebook group, First Home Unlocked, and it's a space for first home buyers to connect, ask questions, and stay supported. And we'll monitor this group all the time and take your questions and build that into future episodes as well. So all the links for these are in your show notes. And that's it for episode 4 and step 4 of the buying process. So in the next step, we're going to break down pre-approvals, what they are, how they work, and why they matter. We'll see you then, Chris.
See you then, Jack.
Thank you so much for listening. We'd really appreciate if you could do us a huge favour. Share this episode with any first home buyers that you know, so we can help more people like you feel clear, calm, and confident when purchasing their first property. You can join our Facebook group, First Home Unlocked, to continue the conversation with other first home buyers. Or if you're ready to unlock your first home, you can book a get to know you chat by using the link in the show notes or by going to firsthomeunlocked.com.au. Before we go, just a reminder that everything we share on this podcast is general in nature and not tailored to your personal situation. We always recommend seeking advice from a qualified and experienced professional when making financial decisions.